Welcome, everybody, to another week of Wealth Wisdom, where we're helping you build wealth and legacy.
Companies are like an organism trying to survive.
It's always a risk when you're investing in a company that's purely tied to someone's brand.
45% of Americans have gone into debt for a Disney trip. All right, everybody, welcome back to Wealth Wisdom, and today's special episode. Happy 4th of July to everyone celebrating.
Happy 4th of July.
Happy 4th of July. Today's Independence Day here in the United States. I'm Justin Obi. This is Bill Ryan, partner principal at Fox Hill Wealth Management. And today we're tipping our caps to American innovation throughout the years, the driving force behind generations of growth in the U.S. stock market. As you guys all know, we have always been long, right? Long the U.S. stock, bullish on the U.S. stock market as a whole, Bill. And
Can you not be?
Yeah, well,
there's some reasons, but for the most part, how can you not be, right?
And we'll dive into that today. You know, it's certainly not perfect, but there's a lot of reason why, you know, you could argue we're the best game in town. But I mean, you look back at the early days of Ford, IBM, and today's tech titans, you know, Apple, Nvidia, Tesla, just legit behemoths.
Oh, it's unbelievable. I mean, even think back to 15, 20 years ago, the fact that you could be like, oh yeah, I want to go on my phone that I can look up anything in the world. You know what I mean? Look up any type of
right.
I can order a car. It'll come to my, you know what I mean? Pick me up at my exact location. Tell me exactly when it's going to come. I mean, it's just all the stuff that's
incredible
going on, right? And that's just a minor thing. There's so much stuff though. It's
soon you're going to be able to buy a car online and it'll just drive itself to you. But today, so we're going to break all of this down, but it's really a celebration of that overall track record and, you know, taking a look of where we've been and why we still believe the long-term outlook for the U.S. markets is really strong. Let's kick off with some rapid fire news, Bill. At the top, you're particularly, you know, I would imagine all over this topic, being expert in tax. Big, beautiful bill. We've talked about it before on the show. It passed last night. Congress wrote it into law. Well, actually, sorry. It passed Congress. It's expected today that Trump signs it into law. So
yeah, I would imagine he would, right? Seeing that this is
dramatic.
This little baby recently.
Yep.
So.
Yeah, and I think it's he really wanted it. People said it wasn't going to happen by the 4th. Like, this was his target date. So it's pretty impressive that it happened.
Yeah, I think he locked them all down, didn't he? Put a lockdown, didn't let them leave, right?
Yeah, exactly.
Nice that Congress put in a long couple days, right?
Yeah, and so all of this is breaking news. This happened last night. All of this stuff happened. There was a House version, then the Senate created their own version. They put it together, and now this is what we're talking about. So some of the highlights here. Bill, why don't you just run through the list of the highlights as you see? And
I mean, let's see. A couple of big things, right? Like, it is supposed to add a ton of debt to our national debt, right? Over the next 10, 15 years. Now, that can be debated, right? There's a lot of talk that, hey, with some of the innovations that we have, with some of the advancements in robotics and things like that, we could blow, you know what I mean?
We could just grow out of it.
Yeah, we could grow out of it,
yeah.
right? And there's a lot of potential there. I mean, if you think about everything that's going on with AI, robotics, that could be massive in this budget. I mean, this debt might seem like nothing in 15 years from now, right? You know what I mean? It could also be crushing in 10 years from now. So, you know, we'll see. I think some of the, you know, the big stuff or unfortunate things, right? You hear about some of these cuts to Medicaid, the SNAP program, you know, up to 11.8 million people are projected to lose coverage, and Medicare cuts of around 490 billion over the next 10 years. They are making Medicaid recipients, you know, must train or work 80 plus hours per month. This doesn't apply to senior citizens, right, of 65 or kids under 14.
No, our parents. It's parents of kids under 14. So if you've got dependents, basically.
Oh, okay. So if you have, would have liked to see them move that up to probably like at least 16, you know what I mean, or something along those lines, or 18. But
definitely.
I would say 18 actually, definitely. And then food stamp, able-bodied adults without dependents must work or train at least 20 hours each week. So I mean that I'd be interested in what that training entails. You know what I mean? So just getting more information. Like, is this government provided training? You know, I've heard of people like, oh, if I'm on unemployment, I need to do certain things, and some of the stuff people say like, oh, hasn't helped
It
at
doesn't
all,
really.
or it does, you know what I mean? So I don't know how much
Yeah.
that's going to help, and it's tough to find part-time jobs, right, that are flexible. You know, but they are, you know, away from that, and you know, depending on where you're at, you know, you could say that's good or bad. I personally, I would like to see that be a little more flexible because you're kind of like hurting the most dependent, right, areas of the population, and so that's definitely going to come with some pains. You know, aside from that, they are funneling 170 billion into defense. You know,
They're building
ICE deportation,
stronger wall,
border infrastructure, yeah, things like that. Again, very controversial subject with like that, you know, some of the stuff with ICE and things along those lines.
Mm-hmm.
Again, I'd like to see them put some money into helping, you know what I mean, the immigration process, make that a little more smooth. We talk about.
Yeah, I think latest they have like a volunteer, and they'll give you money to leave. I think that's what they just announced.
Yeah, but I would like to see them do something to kind of speed up the process to get people citizenship, right? So if there's certain things to do, putting money in that.
On the reverse way, yeah.
Yeah, to help people become citizens, especially, I mean, I know but people who have been here for a long time, who've been working, contributing, don't have any, you know what I mean, problems or anything like that, and are productive members of society. I would like, I know they're here illegally. It's, you know, it's just a tough, no matter how you slice it, it's a really tough conversation.
It is.
Unfortunately, I don't have the answers to those things. Like I said, I would like to see some type of money into helping the immigration process go. You know what I mean? Go a little smoother. But
yeah.
But yeah, big thing there. The
big thing, green energy.
Green energy has been cut.
Yeah, all those incentives,
right? Taken out. I think that going, you know, I'm not sure some of the incentives too, like I was reading about, were like going into coal and some other things, which I thought was bizarre, right? I mean, I understand some green energy, right? Some people are saying, oh, it doesn't really work, doesn't like that. But, you know, I'm favoring of renewables, right? In any way. I'm not like, I don't want to throw stupid money at it, but at the same time, incentivization, I think, is very important in any market. And, you know, if we can start, you know, that's a huge thing, right? If we can cut down on our energy and utility bills, that, you know, that's a long time saver, right? You know what I mean? That's a helper market. So that's,
I think nuclear is not cut, right? So that could be, we've talked about like small micro reactors, right? SMRs. I think that could be a piece that might get pushed a little further. Because it is considered a green, but it was not specifically cut. I think that's a notable thing to highlight there, which is pretty interesting. Yeah. So you think of like some of the things we invest in.
Yeah, and it's a clean energy, and you know, there's definitely, I know there's like alternative fuel sources to uranium that could, you know what I mean, can be used that cut down. I forget what the name of it is offhand, but so that, you know what I mean, that'd be interesting as we make some, you know, progress there. One thing that I think a lot of people, right, tax in overtime, you can deduct $25,000 in tips and $12.5K in overtime. $25K if married, filing jointly until 2028. I imagine that would help a lot of. You know,
that was
police,
the promise.
Firefighters,
promise made.
Wait staff. You know what I mean? That would be a big thing. I would imagine, you know what I mean, a lot of people, that's going to put a lot of money in their pockets, and they'll be happy about that.
And,
you know, they've locked
and they made all the exactly. Yeah.
What were you gonna say? Yeah.
No, I was just going to say they locked in all the other tax 2017 made permanent, right?
Yeah, and I think that's helpful just because if, you know, we went back to the old ways, there would be a jump. I think, you know, most people would see a jump of 1%, 2%, 3% in their tax bill. So that's, you know, pretty substantial.
And I think a lot of people were worried about that. It was like a little, you know, not sure what's going to happen next year. So I think that's probably eased people's minds.
Yeah, and then a big thing too was on the, you know, the SALT tax, right? We had previously had it capped for individuals at $10,000. You know, living in Massachusetts, where you can sneeze and spend $10,000 on taxes between your real estate and, you know, mass tax bill. that's going to be a huge thing for a lot of people. So they're raising that cap from 10 to 40,000. It does begin to phase out at 500,000. So where people were saying, "Oh, this is something for the rich," they're not going to get it, right? People who make over 500K, it's going to get phased out. They're not going to be able to utilize it.
Interesting. Okay.
You know what I mean? So that's something that's a middle
benefit all the high tax
depending on
states.
where you live. But depending on where you live, you could be making, a couple 100,000, right? And that's a huge tax break for you. And you're not living, as we know, right? You're not living high off the hog. You know what I mean? By any means. Like Massachusetts is very expensive. Some, you know what I mean? There's a lot of states that are very expensive to live in. And
California, New Jersey.
Yeah.
Oh yeah.
New York.
All high tax states, New York.
Yep. Absolutely. And so that's going to be helpful for, I think a lot of people, because you don't have to make a lot of money to be affected by that. And I think that will help out a lot of, middle class and, and things like that. Right.
Yeah, no, absolutely. And I think there was like a child tax credit. They kept it up, but basically bumped it slightly, so that.
Oh, they bumped that up 10%. Okay, to 2,200. Yeah, so that's good. I mean, that's one thing I would love to see: child tax credits and dependent care. Like, I know that I don't think that was changed too much, but I would love to see them move up the dependent care for multiple working. I think that would be a huge thing. Right now, it essentially is non-existent. I mean, it's a tax credit of $1,200. Childcare is, I'm not even sure what the average number is. In Massachusetts, if you have a kid in full-time childcare, I mean, you're spending at least $20,000 or more, right? You know what I mean? In full-time childcare. So that is that, you know what I mean? That I would love to see them give to help, working families, you know what I mean? Husband, you know what I mean?
Yeah,
both
Massachusetts is ranked the number one of the most expensive states for
spouses
childcare.
Are working. I think that would be huge. I don't, you know what I mean, for any state, right? You know what I mean? Yeah. It's expensive. Massachusetts is obviously astronomical.
To $26,000 a year. That's what the Google search
which
real
is
quick.
Insane, right? You know what I mean? It makes it very difficult to raise a child, right? So
yeah.
I would love to see them move that up. There was talks about that. I remember, like in Trump's first term, they were going to do something with it. They didn't really do much with it. But that's something I would love for my, congressman or congresswoman to push.
Yeah, no, absolutely. Help more families.
Yeah,
I agree. And then other news, right? So you got the unemployment. I mean, record highs. Like the economy is humming right now. I think by all measures. Going back to last week, what we talked about with the Fed, will they cut? I don't know, but I think there's more and more data says they should. You've got the S&P and the NASDAQ breaking records, a third week in a row for the S&P 500 right now.
Why are you saying that they should?
Well, I don't think their inflation has hit. That's really it. I think while everything is humming, I agree. But
if a jobs report is good, unemployment
they shouldn't cut. They shouldn't cut. I understand what you're saying. Yeah, that's
I'm just
true.
saying
that's
if you look at the factors of what they're really looking for,
there's
not a lot of
fair. I'll retract what I said. Yeah,
I will say though that most of the market is doing really well, and if you think about what's probably struggling or is lagged, right, is real estate, right? So real estate and activities around real estate, that has kind of lagged a little bit, and that probably is one of the markets that is mostly directly affected by interest rates, right?
Yes.
So if interest rates were to, I think that would be, a boon for construction, development, real estate, banking,
incredible.
Mortgage, things like that. People in the mortgage industry, that would really get a boon if we did see some stuff there. It is going to happen, right? It's just, they're slow with it. Powell has said repeatedly he's going to look at data. He's not going to be pressured by being called a dummy or Mr. Late or whatever the heck is coming out these days. But those are things he's going to look at. He's going by the data. You could certainly make the case that he has been late on a few things in the past, right, in terms of raising rates.
Oh, for sure. 2022, I think they they were a little slow to it.
Yeah,
Inflation
certainly.
was rampantly high. I think like 9%.
Yeah, which I don't know. I feel like anyone with looking back, I'm like, this is good. I knew this was going to happen.
Yeah.
You could see it happening. I know they're always late with the numbers, right? They're always a month behind, and you could see it, just everything just going up and up and up and up. And
Oh, yeah.
they should have really probably bid it a lot quicker and a lot higher. I think, you know what I mean, or faster, I should say.
Faster. Yeah,
Yeah,
definitely
you know what I
faster.
mean. Instead of doing like these like 1%, they should have raised it. I don't know, but that's
in the past.
Nothing you can do about it now. So we'll see what happens here in the coming months. We also want to see what the effect of some of these tariffs do with inflation. That's another thing you wanted to see play out.
Mm-hmm.
Once that will
Yeah.
happen, I think we'll see some telling. There'll obviously be some telling stats. One thing found interesting though was when I saw a stat that ADP said that there were 33,000 jobs lost, while the Bureau of Labor and Statistics, right, said that there was a gain of 160 or 170,000. You know what I mean? Jobs. And I was
Yeah.
wondering what that discrepancy is. You know what I mean? Why is that so far off?
Yeah, that's interesting. I don't know. I have no idea. That's
Yeah,
interesting.
something I definitely want to look into. But
Yeah. I mean, so unemployment fell to 4.1%. So they unexpectedly they added 147,000 new jobs in June, which is great to see.
yeah, I just
Absolutely.
found it weird that the biggest payroll provider in the country, you know what I mean, reported a little different statistics. So
Right. Yeah. And you'd think that they have such a large sample size, it should be pretty fairly accurate. So you should look into that. We'll report back on that for everyone listening.
yeah, right.
Let's dive into the main topic. So we've got what's amazing. If since 1926, the S&P 500 has returned 10% on average, or annual average. So if over those 90 years, if you put $1,000 into the market, it would be roughly $11 million today, compounded, just through compounded returns. But what's interesting, like when you dive deeper, it's really like some 1980 massive, like just from 1980 today alone, that $10,000 invested is 1.2 million. So monstrous growth if you just kept it in and didn't try to time the markets, just kept it in there and stayed comfortable long term. So it's just fueled by landmark innovations constantly. It's like you look at the timeline of the Model T, 1908, right?
Yeah.
So really created the middle class and small family, suburbia in America here.
Yeah, right. Allowed
people to go in and out of the city.
Horse and buggy.
Yeah,
It would just
yeah,
that would be
incredible.
yeah.
And then you've got like the first transatlantic phone call in 1927, integrated circuit. So like kind of setting the stage for digital revolution that happened in 1958. And then the Apple I computer. I remember growing up as the Apple II. We had one of them in the library you could share.
Yeah.
But that was 1976. That's when that came out. So kind of democratizing computing power for everybody. And now I even just think about how many computers did you have in your house growing up, Bill?
One.
One. Yeah, me too. One, and we'd all fight over it.
Yeah.
And now I think we have how many? I mean, if we count phones, iPads.
And get this, we had one, and then we had some type of dial-up like internet.
Yep.
The house phone. So, no, but the house phone wouldn't work when the dial-up
Oh, yeah.
was on.
Right.
So like, if like one of my siblings was trying to get a ride home and they're calling the house, it wasn't going through, right? Because my sister was on like, you know what I mean, something. I just
On
find
Instant
it,
Messenger.
yeah, right. Something along those lines was going on,
Yeah.
and we weren't able to, you know what I mean, get a ride home from, our afternoon sports or something.
Yeah.
So,
No, that was the same in my house. Absolutely.
And then there'd be
And
a
now-
fight being like, I was waiting for, 35 minutes trying to like call mom,
And think about now how quickly things have compounded faster and faster and faster, especially within tech. You got the 1995 internet boom. That's what we're just talking about right now. You got the iPhone launches in 2007. I remember that launch and I was like, no, BlackBerry's still better. Like, I love my BlackBerry. And then now, of course, iPhone is crushed. It's everyone's. It's this thing, this
Yeah,
little device. It's in everyone's pocket.
They may have taken a little information from BlackBerry. I don't know if you know anything about that, but yeah, like they had like a meeting.
Yeah.
Steve Jobs had like a meeting with BlackBerry, and they basically like told, I forget what it was, but they gave them the information, and he was like,
Oh, really?
I can't believe you told me. Yeah, I mean BlackBerry's tried
Wow.
suing them, and I mean things like that.
Oh, wow.
over the years.
Okay.
But yeah, that was one of the reasons why. I mean,
Yeah, so I mean, that's been amazing.
Apple had a,
Yeah, but the whole interface, everything, right? Like the whole screen. It's just
the ecosystem, everything.
massive.
Yeah, exactly,
massive.
right.
So that put them over the map. And then now we're witnessing the AI revolution. So that's happening. I think today you can talk about the biggest performing sectors, but
100%.
we talk about it a lot. You've got, I think, energy, data, robotics, AI.
It's
incredible.
Massive, right? Biotech, the stuff that's going to happen with them being able to take down data for, for biotech and what it can potentially do for disease. There's just so much stuff that AI, that's why they say it's going to be bigger than the internet, right? Like it's a bigger innovation than even the internet. It's going to allow people to do the work, one person to multiply their work output by thousands. You know what I mean? Which is insane to think about, right?
It really is. It's incredible.
Yeah, really is.
I was just saying this to someone the other day. I think, I've witnessed, we've just talked about it right now. When you think about just in our lifetime, you had the internet come about. At one point, websites weren't a thing. Businesses were actually debating, should I have a website at one point? Do I need one? I don't know if I need one. Should I develop one? The cost of that now has dramatically been reduced.
Mm-hmm.
And now it was then it was just Web 2.0. It's like social media, right? And businesses, again, so you have Facebook coming up. Obviously we've talked about Meta a lot on the podcast. I would say largely also like Netflix has benefited from this as well. When they first came out, it was discs, like CDs for
get in the mail, right?
DVDs. I couldn't even think of the name. DVDs, yeah, right. Like things our kids will never know. So you had all this stuff, and now it's on demand on all devices throughout the house. And we've talked about Netflix a lot on the show.
Oh yeah,
I think.
What's funny too, remember when Netflix first came out with streaming, and they didn't really have a lot of good stuff on their streaming. You know what I mean?
Yeah.
Package. So you had the DVDs and the streaming.
You had both.
And then
that was, I think, a package offer they had.
Yeah, but I remember thinking, I'm like, there's nothing really that great on the streaming. Like they offer a lot of, I don't know, it just wasn't that good at first. And then I feel like it just, same thing, right, with technology. It just up and to the right. You know what I mean?
Yep.
Where everything just took off so much better of a, of a package and service.
Incredible.
And it just, yeah.
Yeah, and so now I think you had social that came through, and now I think right now with AI, that's the next wave. That is the wave to ride, and how many, and we've talked about it as well, but how many different sectors that's going to impact, right? Like with energy,
everything, it's going to dramatically affect everything.
Yeah. So think about, I want to pull this up real quick. This is crazy.
And then it will just take down all humans, though. Yeah. We will be riding high for a while, and then all of a sudden it will be the Terminator. You know what I mean? But
all right, so this is by the largest companies. I should get here. Okay, so we've got some of the largest. This is by market cap. Okay, just compared to the rest of the world, for a lot. You've got the EU, some of the largest companies in the EU and the UK. You got Novo Nordisk at $389 billion. LVMH,
makers of Ozempic,
59.
Novo Nordisk.
Yep. Hermes, Accenture, Lind, L'Oreal. I mean, those are big companies, very big. Not taking away anything from them.
Long-standing brands, right? Yeah, that have been around forever. Will be, you know what I mean? Luxury brands in Europe, things like that.
Absolutely. And so then you got, Chinese companies, okay, very Very big, much bigger than the European ones overall. You got Tencent and Alibaba, but
Much bigger
Tencent's a
market, right?
much bigger
So,
market. Now look at this. Look at the U.S. So like total market cap in Chinese companies, the top 10 are 2.6 trillion, 2.8 trillion for Europe. Top 10 is 20 trillion in the U.S. That's to me, I was blown away. You know, Walmart, Berkshire Hathaway, Broadcom, Tesla, Meta, Alphabet,
yeah.
Amazon.
Well, one of the things too, I mean, obviously these are huge margin companies, right? They're very, very profitable, and they also, a lot of people sometimes, and this is, I kind of get a kick out of like where people are talking, especially like lately, right? Oh, international stocks have done really well. Dollar hasn't done too well. International's done, you know what I mean, or outpaced the S&P this year. And, so there's been a lot of talk about that, but a lot of U.S. companies they're very global, right? We have a much more, there's a much more global outreach with a lot of those companies than some of those. Like if you look at some of those Chinese companies, for example,
Yeah, that's true.
they're
That's
like
a great point.
non-existent essentially in the U.S.
Outside of
right?
China.
Where I would say
Yeah.
that 10 of those, like those 10 companies have a very, they've infiltrated China, right? For example, they're, involved in Europe, everything like that, right? Now, some of the European brand, those brands and things like that, right, are definitely worldwide, but they're more limiting than some of, you know what I mean, than what you see in the U.S. Also,
Yeah,
different
that's
types
true.
of businesses, right?
Yeah. And then you've got, oh, I completely agree. And then here's a quick thing. It's not so pretty. I should have, but I might as well show you guys. But like this is Walmart, the total combined revenue. $681 billion. It's bigger than some countries.
Yeah, I mean, I almost
Amazon,
think, yeah,
638 billion.
I'm not shocked by it, but I'm just kind of surprised. Like, you know what I mean, in some manner, right?
Yeah, I mean it's bigger. That revenue amount is bigger than the GDPs of some countries throughout the world. Many countries actually. Just some wild statistics. Why do you think? What is allowed? What's been the case for America that's allowed this to happen? Like is it a cultural thing, Bill? Do you think? Is it more of like we take on more risk, or we push the American dream concept? Entrepreneurship.
I think all those things.
Or is it more of like a government?
It has to do with our government, our rules and regulations. It has to do with, like you said, like the ability to take, you know what I mean, the entrepreneur, the risk that they're willing to take on that you don't, you know what I mean, that you're not able to do necessarily in other countries.
Yeah.
And everything from our roads and, you know what I mean, like systems and stuff like that, and how to get things around and ship things. You know what I mean? All those items that, you know what I mean, have to do with it. And our education system, you know what I mean, our colleges, our universities, I mean, just I could go on and on.
I think
right?
taxes have helped, right? So there's, I think at some point if you start taxing people too much, there's no incentive to go out on a limb and take the risk and innovate, because the risk reward doesn't make sense. I think you start going into that.
Yeah,
and that's helped.
I don't even think
that's
that.
helped.
I think what it does, if there's too much taxes, it takes away from that person's ability to get capital. You know what I mean? To reinvest. I don't think there's like
Yes, yeah.
I think people are always trying to like make, you know what I mean? Like grow and make business and stuff. It's just harder. You know what I mean? I don't, I do think someone or most entrepreneurs, they're not like, oh, the tax code is, they just want to take advantage of the tax code as much as they possibly can, so that they're able to take that money and utilize that capital, because you need capital, right, to grow. So
yeah, but if more money is being siphoned out, I would always argue, remember, like if the taxes are reduced by like even slight percentage I'm not talking about big corporate. I don't think they're as affected. I think they are, but not to the extent. But a few episodes ago, we talked about how many entrepreneurs there are in the country. For those small businesses, taxes coming out of your pockets. So if you have more money
that's what I'm saying.
You can invest more.
Yeah, it takes away from their investment. I think those people will be operating
exactly
regardless, right, of the tax code. You know what I mean? They see it as an expense item, right? You know what I mean? So
They should move faster, innovate more, build
Oh, yeah.
faster. Yeah.
add a software, adds,
Yeah.
like you said, right? Add, whatever
Yeah.
it might be, right? But they can put in as opposed to cutting a check in April. You know what I mean? So
Yeah, exactly. Yeah. Yeah. No, but there's, we've talked about what is it? They call it the Fang and now the Mag 7. Just truly crushing within tech as well. So I think,
yeah,
you've
it's not. I
got
mean,
it
obviously
all.
these companies make so much money, and we do have kind of say it's kind of a problem, right? Is it's like winner take all? You know what I mean? These companies just have so much money; they're able to invest, take over things so quickly.
Yep.
It can be, you know what I mean, a little worse in the times, but that's hopefully what they'll do is they'll end up fueling things, you know what I mean, to other parts of the economy. But they're definitely certainly going to be the leaders in the coming years. But there's going to be other companies you'll see don't seem that big, and they're gonna explode with AI. We don't even know about a lot of them just yet, right? But it's coming.
Yeah. Yeah, absolutely. The other thing I think, just to highlight the amount of, we attract some of the world's top talent because of the rewards that we can put in place. You have some of the best universities in the world here, right? So that's always fed innovation, fed Silicon Valley. 60% of global VC funds are based in the United States. So there's more access to capital. Just
Major factors.
Yeah.
I think, like you said too, like people come here, meet, you know what I mean, meet and network, and just the synergies that come out of that, that's resulting in, right, a lot of these things that we've really benefited.
Yeah. In our defense spending, a lot of technological breakthroughs have come out of the government to put into private over time.
Mm-hmm.
But like a lot of people say, like, well, what about China? So I think it's and what about Europe? It's just they're weaker in risk taking. I think, like, as a culture. I don't know if you agree with
I mean,
that.
I recently was listening to a German economist, you know what I mean, just talk about, and he was just talking about like debt in general, and debt in their country, that like the word is literally associated, you know what I mean, it had the connotation of debt is like bad, or not even bad. I forget.
Interesting.
I really wish I had a better way of how he described it, but it was
just kind of like
almost like shame. I guess that's the way to describe it. Debt is like equated with shame, right? And it's not really looked at as a tool in a sense, right? I think in America it's more, it's like, all right, tool, like how do we leverage our debt, right, to make more money and things like that. Whereas
the right kind of debt is great.
in a lot of other countries they see it as more, it's like, oh, debt, like, got to pay those debts off first, then we'll grow. You know what I mean? As opposed to being like, all right, we can utilize this debt, and then we can grow this here, you know what I mean? And what that's going to allow us to do is pay down the debt over time while this is growing and things like that. And that just, I don't think that is as prevalent in other countries. And I mean, it's really one of the reasons why the European markets have done so well this year is because they've decided to do more spending, right? And some of the spending that they're doing, and they'll be. This same economist was talking about how this has actually held the German economy back, right? There was no government spending. There was no, you know what I mean, things like that. And that really hurt their innovation.
Yeah.
And because of that, they went from being, one of the top 5 economies in the world to, you know what I mean, much further down the list because of some things like that. And now they've really decided to do some spending, and you see, that spurred their markets.
Try to turn it around.
Yeah.
Yeah. Yeah, so I think, it's just looking back on this, it's amazing, the constant innovation in America has been, whether it's the culture, it's the tax system, guaranteed laws, regulations that have been made it a secure footing for people to build on. Probably all of the above, but it's pretty fascinating just to see. So I think, overall, like in kind of in closing, I think it's like not like when the right time to invest, but maybe it's how are you planning to grow in the next wave, right? Like this AI wave, like if you're listening, if you're an entrepreneur, like what are you going to do there? If you're just, an investor, how are you going to invest in that?
I mean, as an investor, there's going to be, I just feel like we're in the middle, you know what I mean? In the middle of a big bull market right now. I expect it to run for at least another like 3-4 years. There's going to be hiccups along the line. Don't get me wrong. We're going to have pullbacks, just like we've seen when like information about DeepSeek came out, tariffs,
sure.
you know what I mean? Things like that. We're going to see pullbacks, and you will see this stuff happen. There's going to be when you look back, you call them hiccups. When you're in the middle of them, you think you're in war. You know what I mean? That stuff. That stuff's going to happen. But I really think there's going to be massive growth in the markets, and you got to be in it and participating in those. We're going to be doing everything obviously we can on our end, looking at all the opportunities and making sure that our clients are in a position to really take advantage of all the benefits that we're going to see.
Yeah.
So
it's going to be a lot. I think just having a team to guide you through that and also stay invested. I think that's the other big takeaway here. If you have to stay invested over the long term.
That they're looking at things on a daily and weekly basis and making changes. You know what I mean? Making changes so that you're able to take advantage of everything. And making sure that a lot of people say like, oh, this AI bubble is going to happen. This AI bubble is going to happen. And even from like an institutional side, right? There's still a lot of money that are quote unquote on the sidelines because people are a little skittish, right? From they keep thinking of like the .com, right? Like what happened in the .com.
Constant talk about that.
Yeah. So I mean, they're like, when is this AI bubble going to happen, or how are we going to see that massive? Right? I mean, it took, I forget how long for the NASDAQ to come back to its levels, right? From where it like topped out, you know what I mean, during the internet boom. So there's a lot of people who are still working there, you know what I mean, from that time who remember that and are worried, you know what I mean? Is this going to be the AI bubble? Is this where it bursts? You really want a team and a group who's looking at everything going on in your portfolio, making sure that you're able to take advantage of the upside, but also you're in a position to be protected, right? And make sure that your wealth is in a spot where, like I said, you're able to take advantage of the upside, but hopefully, limit things and just keep you from making any rash decisions that could negatively affect you in the long term.
100%. Yep. So remember, everybody listening, thank you again. Enjoy your 4th today. If you're celebrating today, enjoy it. Have fun with friends and family. If you need a free strategy call, we are here, foxhillwealth.com. Like, follow, subscribe, share this with some friends. If you're a good friend, hopefully you'll share it with someone who can benefit from this. And that's it. We'll see you guys next week.
All right. Happy 4th of July.